What's up everyone, welcome to the Akuma Fund. Today I'll be discussing why I'm switching my assets from Robinhood to Fidelity. So I started investing for my own picking individual stocks probably about 4.5 months ago, right? So obviously I haven't been in the market very long, and I wanted to see if I liked investing, if it was something I enjoyed, if something I didn't enjoy, if I didn't have the if I had the mind for it, if I didn't, right? It's just dip my toes in the water, right? Because I've been heavily influenced by like, oh, just buy S&P 500 index. That's all you need to do. Just throw your money into a robotic advisor, just with 4% safe withdrawal rate and all that good stuff. And that's all fine and dandy, and that's definitely a path that I can go or could go. But I decided instead to pick individual stocks. Being a new person and knowing a little bit about commission fees and such, I thought, okay, I want to pay as low as possible commission fees, because that will eat into my money. At the time I was only planning on depositing maybe a few $100s a month, just to get my feet wet a little bit and see what I could do. And my goal for the end of the year was $3,000, right? So I was like, okay, I'm gonna put $3,000 away by the end of the year. So I started depositing a little bit more cash and all that good stuff. If I'm only depositing, $1, $2, $3, $4, $500 at a time, and I'm making trades, a 5% commission rate, or $5 or $6, or even a $4 or dollar commission rate will really hurt me if I'm only purchasing stock for, if I'm only buying $300 worth of stock, right? It'll hurt you if you're splitting. I mean, it's just simple mathematics, right? If I'm buying $10,000 worth of stock in one purchase, okay, and it's a $5 commission fee, that is what, like a 1/100th of a 1/500th or something like that. I'll just do the math here. Versus if I have $100 and I do $5, which is that's 5%, right? And I decided to go through Robinhood because it didn't have any commission fees. If you're just buying and selling stock and you're new, I mean, Robinhood is a great option. It's super easy to set up an account, pretty easy to understand. There's plenty of videos on how the whole thing works, etc., etc. But there are a few things that I started to get more, I guess, advanced into investing. As I started to get more into investing, and I started doing some options trading. So, for example, I sold a long option call on, I sold a long-term options call for like $133 on AT&T shares. Okay, the $35 strike price and all that good stuff. And I was thinking later on recently, like, oh, I kind of want to buy back my options call because it dropped below my price, and I kind of want to I want to redeploy that money into other different companies besides AT&T, because most of my portfolio right now is in AT&T. But Robinhood doesn't really have a way you can buy back your options call, right? If I decided to buy a call option, I would just be buying a call option. It would be I have a selling call option and I have a buying call option for the same strike price. It just doesn't make sense. Halfway through my investing career, they introduced more stocks. Like they introduced a lot of Japanese stocks, some European stocks, and that's all fine and dandy. They're increasing their thing. They finally included candlestick charts and all that good stuff, and it's not enough for me, right? I want to have the advanced features. I'm starting to deploy, well, sporadically. For example, don't feel bad about these numbers, because some people will say this is nothing, some people will say it's a lot, but I'm just giving numbers to explain why I'm making the transition. So my grandmother had basically a minor's trust investment thing for me, right? It amounted to a total of about $2,600. Okay, and if I'm making $2,600 worth of stock purchase, for a $5 fee, that's not very much. Okay. Later, I get a big paycheck from my job. It was and I decided to put $1,600 away into. I decided to put $1,600 away in my Robinhood portfolio to purchase some of Atlantic Yield stock and some Tesla. However, Robinhood has this feature, right, where you can instant deposit a certain amount of money. And the maximum limit, if you don't have Robinhood Gold, is $1,000, right? It's $1,000. And I did two separate deposits of $800. So I did $800 and then I did another $800. So it allowed me to, it gave me $1,000 worth of margin, basically, right? Which is fine, you know, instant deposits. I can just say, oh, blah, 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 and I can start buying my stocks right now. That's awesome. You know, it's good for a beginner, especially whenever, you know, you're kind of impatient, you want to get started, you know. But unfortunately, the way they do it is you see the transaction finally show up in your bank account maybe 3, 4, 5 days later, and I was $50 short of $1,600 in my checkings account, right? So I went negative $50. They put the money back, the last $800, and then I was charged $30 of Robinhood Gold, which I was like, oh, whatever. I mean, it happens. And then I did it again. I screw up again, and they charged another $30 for Robinhood Gold, so $60, okay. And that would be what, 12 trades on Fidelity, right? 12 trades on E-Trade, 12 trades on Charles Schwab, 12 trades on whatever, right? So I'm sitting there thinking, like, I just lost $60, okay, for doing nothing, because of this whole weird, like, instant deposit margin thing. I know I can turn it off, but at this point I'm just thinking I want to switch to something with more advanced tools. I want to have more analytics for my own portfolio, for example, with just simple stuff like on Fidelity they have a chart you can look at to see your balance over time, right? And you know, as maybe 1 year, 2 year, 3 year, 5, 10, 20 years from now, I want to see, okay, I remember when I had $5,000. I remember when I built that up over time, you know what I'm saying, to an X amount of portfolio, right? I want to have those analytical tools, and Robinhood just does not. It does not very. It's just another one weird little quirk it has is I like to invest for dividends. Okay, dividends don't show up on the chart as profits, which I know that might sound like a small thing, and it is a small thing because I'm still getting my dividends and it's fine. But there's no option for reinvesting your dividends. There's no options for fractional shares, which is important when you're getting like a, let's say. I purchase stock for 20, and then I have X. Let's say I have 50 shares of it, and it pays me. Let's just say 30. Let's say it pays me $34. Okay, it pays me $34, and I can buy one full share, and then I can't buy the second share with the I mean, it doesn't even have a reinvestment plan, so it doesn't even make sense. But I want to have more options with the portfolio. I want to open up a Roth IRA, and Robinhood is a great place to learn, but I don't think it's a great place to stay, for me at least. I'm hitting the point where, you know, $5,000 is not a lot of money, but it's enough where I don't want it to be screwing around in some not really proven brokerage, right? Because I mean, I like the platform. Okay, look, I like the platform. It's great. Commission-free trading's awesome. The instant deposit stuff is cool, but it lacks serious features. You know, it lacks some serious features, and at me at this point, I have to say I'm going to change my brokerage. I'm choosing Fidelity now because I mean I'll do some more research. I'll keep you guys updated. But that's my decision. What do you guys think? Did you guys switch from Robinhood to something else? Are you planning on staying with Robinhood forever? Are you someone with like a $50,000, $100,000, $1 million account with Robinhood? I couldn't imagine doing that. But I'd love to hear you guys' feedback. Thank you very, very much for watching. Akuma out.